Welcome to Global Investment Insights, a weekly podcast brought to you by ADCB Asset Management. My name is Kishore Muktinutalapati, an equity strategist for ADCB. With an objective to empower you with investment insights, on this program we discuss various perspectives shaping the global investment landscape. Broadly, there are two distinct mindsets amongst financial market investors: conformists and contrarians. Conformists simply stick with the consensus view and go with the flow. This leads to the typical herd mentality in financial markets. Contrarians, however, hold a point of view on the market that is out of favor. This is akin to the strategy of the star investor Warren Buffett, who said, "Be fearful when others are greedy and greedy when others are fearful." As such, going against the grain needs conviction. This conviction should come from doing sufficient research and spending a lot of time evaluating market conditions to build the contrarian case. It may take an investor a long time to fully develop a contrarian viewpoint and even more time for this strategy to pay off. Further, contrarian investors must be comfortable with the risks and potential losses that come with the waiting. By making investment decisions that are not consensus and doing so early, contrarians aim to make trades before the consensus view shifts in their favor. Now, you might be wondering why we are discussing all this now. We're discussing this now because for long-term equity investors who are willing and able to be contrarian, a good opportunity to position back into equity markets might be emerging now. After steep declines in the prices year to date, equity markets are pricing in a lot of bad news already. Investor positioning is bearish, technically markets are oversold, and valuations have corrected, preparing a fertile ground for contrarian investors. High and rising inflation, slowing growth, lingering virus, rise of geopolitical risks, and central bank tightening have all created headwinds to financial markets over the past several months. After a volatile 5-month period, we might be close to or even at the point of maximum pressure on financial markets, where a range of headwinds are all blowing at their maximum speed. Looking ahead, we should expect the headwinds to abate and provide the much needed relief for financial markets. This process is likely to be gradual and spread over a period of time rather than achieving relief overnight. However, contrarian investors might like to position ahead of the rest. We think it is time for contrarian investors to look at each of the macro drivers and think what could go right from here. Now, let me talk you through this exercise wearing a contrarian's hat. To start with, the immediate relief could come from the easing of COVID-19 restrictions and policy easing in China. Markets are likely to reassess the outlook for not only the Chinese economy and assets, but also of the global trade and supply side bottlenecks. Further, moderating inflation should help improve the risk appetite. Environments of high but falling inflation rate are more favorable than those of high and rising inflation. While there is uncertainty about the trajectory of inflation, we do expect the inflation trends in the near future to be pro-risk at the margin. On growth, while we are watchful of downside risk to the global economy, we're not worried about a recession at this stage. Our base case scenario with higher probability sees an asynchronous mid-cycle slowdown of the global economy, and the worst case scenario with lower probability sees a recession. As markets navigate risks around growth and inflation, perceptions about the monetary policy are likely to remain fluid and at the fore. Here, markets have priced in hawkish extreme despite uncertainty about the neutral rate. As inflation cools and growth slows, markets are likely to reconsider their hawkish bets. On geopolitical front, any improvement in the Russia-Ukraine situation is likely to be near-term positive for risk assets. However, we see the recent rise in geopolitical risks as one episode in the long-term trend of this deglobalizing world, and investors need to adapt their portfolios accordingly. To sum up, we think current market conditions are favorable for contrarian investors willing to make long-term bets. While further near-term volatility cannot be ruled out, equity investors with longer time horizons should find the current risk-reward proposition more favorable than a year ago. Medium-term opportunities are in segments that were beaten down quite heavily over the past 5 months. We also expect the structural equity market themes to resume their uptrend soon. Thanks for listening. We hope you found this podcast useful. If you did, please do share this and other episodes with family, friends, and colleagues. For more information on what was discussed on this podcast, please reach out to your ADCB relationship manager. You can also log on to our website at www.adcbam.com for more information. My name is Kishore Muktinutalapati, and I will be back next week with more global investment insights.